Hello, welcome back. We're here on a Friday, celebrating Finance Friday. Rob Morales, RCO Network, coming at you live, talking about money, talking about finance, talking about things that I'm still trying to figure out. I really don't know how to manage money. With me, my special co-host, straight out of Sacramento, the Satoshi himself. Please welcome Sacramento Satoshi.
What's up, Robert?
There he goes. He's back. He's back in action. He's bringing it back hard and to the point.
Heavy.
Something like that. So we're here talking on a Friday, talking about just money and the things that are going on in our economy, things that affect us, and hopefully we're here to learn a little bit more about how to manage our money. I don't know. But before we start, sir, I do have to mention we do have an event coming up. You're going to be attending, right, sir?
In a couple of weeks, yep, I'll be there.
I know. It's exciting having you back from Sacramento, flying in the day before to be part of this here outside the elevator event coming October 20th at 5:30 here at our RCO Network offices down on 24th Street in Camelback. Please join us for an evening of fun entertainment. Learn a little bit, get to know Satoshi. He does like his drinks hard and strong, right, sir? No?
Sure.
So join us on October 20th for our event, and you'll see Mr. Satoshi himself making an appearance. How'd you like the last event that you came to?
Yeah, it was fun. It's
what a testimony! Hey, it was fun.
Yeah, I think that was the costume.
Yeah, you got to meet Jill Kimmel.
Yeah, it was. I had a good time. You raised money for a good event, and you had the comedian there. She was pretty funny. Yeah.
A lot of interesting things. We still have some planning yet to do, but if anybody's out there, please join us. The tickets are on Eventbrite. There's a link down below, and join us on the 20th. But, sir, what are we here to talk about? Money, we're here to grow it. We got about 30 minutes while people are finishing up their lunch hour, sir. Satoshi.
Well, I think, I was reading an article the other day, and it was basically, what are people talking about in the news? And
everything.
Some things like, let's say, crime or whatever, they were pretty stable, but it went from COVID being number one and inflation being super low to now COVID is very low or minimally talked about now, and inflation is the big topic.
Well,
so I think that's what.
I think we see inflation impacting us all. Gas is going up again. I noticed that. I went to Sam's Club thinking I was going to get a good deal on gas, and it's pretty much what I thought was normal. It was like $4.79 a gallon here. How much is it in Sacramento right
now? I don't know exactly, but it's probably somewhere around $6, I would guess.
Well, it's because you drive an electric car, sir. I know. You're not part of our my issues. I do want to buy an electric car. So Tesla was something that I've been waiting for the long range Model S to be available. They only have the regular range Model S. And I guess we're waiting for the guy at the dealership basically told us it wasn't going to be until June next year that they're going to have the long range Model S available. So for you Tesla extraordinaires that are looking at buying a Model, I'd prefer which one is the cheaper one? Is that the Model S or the Model 3?
The entry level is 3.
Yeah.
I'm still waiting for the Cybertruck, but I've been waiting for like 3 years, I think.
I think everybody's waiting for the Cybertruck. Actually, I was wondering, you may not know, and this is just something that came off the top of my head, is like, you do get a tax credit as a small business owner if you have a 6,000-pound vehicle. That's why you see like these big, like these law firms and stuff, they buy these like Explorers, stuff over 6,000 pounds because they get a tax credit for it. And so I was wondering how heavy the Cybertruck was for that tax credit. Not only do you get the electric car tax credit, but then hopefully you get the oversized vehicle credit, like it's a work truck or something. Have you heard anything about that? You're not a CPA, I know.
I did hear something about that, but I don't know the specifics of it. I mean, as far as the truck goes, they're not even looking to build until next year. So I guess if it's available, great. If it's not, then.
Well, amongst a lot of things that I think Tesla promises, they're kind of like the fully automated cars. They're still not a thing yet. That's been like.
But that's one example of the government. So inflation is kind of comes from different places. One is monetary policy, kind of what the Fed does. The other one is fiscal policy. So that's Congress. So when they pass the Inflation Reduction Act, they give out these incentives to people, and it's not really, that doesn't really help. So when you say, oh, we're going to give you credits for cars, and then, hey, by the way, everybody, your student loans are paid off, that kind of goes against what they're trying to do, which is the Fed is basically just looking at inflation and jobs. And normally, you got to remember, normally the governments, or I don't know if I should say the govt, they love inflation, right? That's like remember, that's a secret tax for them. That allows them to spend more money than they actually have. It's just that they like to keep it low, because it's kind of just, have you ever heard of the story about like a frog? You put a frog in water and then slowly boil it. The frog will stay in there. But if you throw him in boiling water, he jumps out. And inflation is kind of like that. Like
Yeah.
they want to secretly tax you with this inflation, but they want to keep it low, because when inflation gets too high, um, and I think most people just generally accept as a fact that, okay, things are going to go up in price over time. They don't even argue with that anymore. They say, okay, well, yeah, 20 years ago gas was $1, now it's $3. That's just a normal kind of thing of what happens. But when gas is
Yeah.
$3 last year and now it's $6, people say, hey, wait a minute. Uh, they get pissed off, basically, and then they start voting, and then people lose jobs. So
I,
that's why they want to keep inflation at a low pace.
Yeah, and I guess we don't really talk about politics, but I do know that you have to pay attention to the direction that politics go or politicians play. I mean, if you're one side or the other, you kind of have a trajectory on where things are going. If it's a Republican based Congress and president, then you pretty much know for the next 4 years there's going to be a lot of tax cuts and a lot of incentive for small business, which helps me. And then if there is Congress that is Democratic and then president's Democratic, you kind of know it's going to lean the other way, where there's a lot of social programs and a lot of whatever. So you kind of make decisions based off of that. But in this day and age, sir, is there anything that we can do to alleviate that? I mean, is there anything you're doing in the process? I'm trying to cover all my expenses. I'm trying to pay down a lot of my high rate credit cards right now. I think I'm down to pretty close to being all paid off. But because inflation and I think there's a recession. But this recession that we're experiencing, I think it's going to be prolonged, and it's going to be a little bit excruciating especially the next 6 to 9 months. So is there things that you're doing that are helping with that, or maybe not give it, maybe give advice but not advice at the same time, because we're not financial advisors by any means. Because Lindsay's watching. Lindsay, hi Lindsay, she's watching.
Hi, Lindsay. Yeah, so in general, I mean, so we like the plan doesn't really change. Okay, the plan is still the same. The plan is just to accumulate assets over time. But
like
so
real estate.
but it is important to look at macroeconomics. So
Yeah.
what is happening on a global scale, or what is the big picture? Because like we said before, so what inflation is one of the issues is, like, if there's more dollars out there, then there's going to be more demand. So more dollars are going to try to go after the same amount of assets. So you can look at like real estate and say, you give everybody a bunch of money, then the prices of the real estate are going to go up. And the opposite
Yeah.
is true when you raise interest rates, when you try to do quantitative tightening, then you're going to make the dollar stronger. And so what does that mean? That's it's kind of works inverse to assets. So if you have a strong dollar, then assets will decrease. So prices of homes should go down, stock market should go down. But you got to remember that these are all, it depends on your short-term view or your long-term view. So short-term, right now, the dollar this year was the
Yeah.
only thing that really had a lot of strength. So if you had a bunch of cash, you did well, because you could buy more things. You could buy more stocks. And you will be able to buy more housing. We're not quite there yet. You got to remember that the housing market lags the stock market. So the stock market is more liquid than real estate. And when I say that, I mean that, for example, like cryptocurrency is even more liquid. So cryptocurrency trades 24 hours a day, 7 days a week. Okay. Stock market trades Monday through Friday from 9 a.m. to 4 p.m. So let's say it's Saturday and I need to get my money out of the stock market, I got to wait till Monday. Okay. So not as liquid as cryptocurrency. And then real estate is even less liquid, because if I have a house and I think, oh, the market's in a bubble, I want to get out, it's going to take me, you know, months before I get my money. So in
Yeah.
general, the housing market lags. So if you want to see what's going on with the real estate market, you just kind of follow the stock market.
Or you follow the Monday
Um,
Market 15. The 15-minute show takes 30 minutes on Mondays, every Monday here at RCO Network at approximately when Ashley gets here. Really, this is really the time we start. But between 1 and 2 is when we start that show. But you
there you go.
mentioned housing, as part of that asset class. So a lot of what I think in this environment, and I wish and I want everybody here to encourage, is to purchase assets and have them work for us. Buying assets that work for you, and that could be something as simple as like a camera, right? If I purchase a camera, a high quality camera, this one in particular that I'm using is roughly about $4,000. So you go and purchase that camera. Over time, you'll be, hopefully you get jobs, whether they're video, whether they're in photography. But over time, all those jobs pay that camera off. But at some point, you have this inflection point where you start making money off of that asset because now you use it as a part of a business, and now you can generate income based on this one product that you purchased. Housing works similarly like that. The stock market's supposed to work like that, not right now. Well, even housing, because you brought up housing. So I think housing is, one of those things that people strive for the most, or try to purchase the first thing. I mean, that's the goal after the car, right? After you get the girl, after you get the wife, the car, the white, the next thing is a white picket fence. But utilizing that asset, I think, is crucial. And right now, we're seeing an inflection point in that too, right? So you had some graphs and charts about the housing market, if I am correct.
well, just a point, like, I forgot your first point, but
I think fast and I go faster.
what were we saying? But anyway, the second point that I thought
Oh boy.
was, yeah, a majority, like, the lower, if you look at everybody's net worth, most of the people, when you look at 90% of the population and lower, have most of their assets in their house. And you were saying, you were saying the stock market is not doing so well. Well, these things, you got to remember that long term, the dollar is still debasing. Okay, so the dollar is going down over the long term. So so the story doesn't change. We still accumulate assets, but why you feel the stock market's not working is because the stock market's down. Housing is still elevated. So in your mind, you probably feel like, well, housing is a better investment.
Well, it really isn't,
But
but
they're both good investments.
I'll
They're
go
both
with
good
it.
investments. It's just that when things are down, so my prediction is like over the next year, the housing market is going to go down. Does that mean that it becomes a bad investment? No, it's actually, that's the opportunity where you want to start looking. So the problem is, it's like we don't know where the bottom is. It's very hard to look
Yeah.
at and see market tops. That's actually more difficult than market bottoms. Market bottoms are a little bit easier, but they're still difficult. You don't know what the Fed is going to do. They want to raise rates. They need to raise rates.
Well, we need to
They
pay.
want to
We need
have.
to
They
pay
don't
down
want
all
to
our.
have.
We need to pay down all our national debt.
Well, that's the big problem. The United States government has a lot of debt, and so whenever you raise interest rates, what you do is you slow down the economy. That's number one. And also you increase the amount of interest that you're going to be paying on your debt. And so that's the equivalent of having, it's just like a household. If I reduce the number of hours that you work, and then I increase the interest rates on your credit card, at some point, that's no longer going to work, especially if you have a lot of credit card debt. And you got to remember that, like, basic math will tell you that the United States government has about $3.6 trillion of money that they are in that they spend. So that's what it takes to run the government, as far as Social
Most of that's
Security,
military,
entitlements,
isn't it?
and that kind of stuff. The military is like, yeah, it's almost
Yeah.
$1 trillion, and they take in revenue of 4.8 trillion a year. But you also got to remember that this year, a part of that, probably 30% of that revenue is capital gains, and this year you're not going to have a lot of capital gains. So we're going to have less revenue already. Plus, you're raising interest rates, which is going to lower GDP,
Yeah.
and you're raising the interest rate on yourself. So at some point, things start to crack, and you can kind of see that that's already kind of happening around the world. You saw like was it Credit Suisse in Switzerland? Australia's having some
Yeah.
issues. The other day, Great Britain said, "Oh, we're gonna do what the United States is doing because they're the leader. We're gonna start tightening," and then their market started to collapse. The sterling. When I last time I went to England, it was like uh, it took a dollar and 80 to get one sterling, and now the currency has just collapsed to where it's almost 1 to 1. It went down to like $1.03 or something like that.
So are you buying
So those are
investments in
all kind
England
of
then, or
warning signs. What's that?
are you buying investments in England then? Right now is the time to buy overseas, right? It's time to purchase properties if you can. I mean, for fairly cheap pricing because the dollar is strong.
Right. Yeah. I mean, the dollar it's a reserve currency, so it's going to be so what people when currencies start collapsing around the world, people will look to what's it's like a fiat is destined. Remember, fiat currency or the dollar is destined to go to zero. It's collapsing.
Well, if you know history,
It's just that
yes.
it's
I
the
mean,
strongest amongst all the currencies. So if you live in France and your currency is collapsing at 10% and the dollar's collapsing at 5%, I'm going to move to dollars, and it gives it strength.
yeah, and for all you people that
Um,
failed in history class, this is why you study history, to kind of see patterns. Those patterns tend to play out. I mean, we don't realize those patterns because we're caught up in today, but everything that we're experiencing, we've experienced before. You just got to know your history, and I'm not the history buff myself, but I read enough, or at least watched enough articles and enough YouTube videos to kind of have a sense of like where things are going. But nobody can predict the future. That's the hard part. I think that's what everybody wants.
right.
Everybody out there
That's what
wants
I'm
that quick
saying.
answer, Satosh.
That's what I'm saying is like you don't know when at some point we'll hit a bottom and then the markets will start to recover. You just don't know when that is. But yeah, so increasing we've had major increase in interest rates. We were at 1% at the beginning of the year,
Yeah.
and every meeting they go up by 0.75 point. Now we're up to 3.3%. If you go from 1% to 3%, that is $1 trillion in interest payments every year. And I just saw an article yesterday that last year the debt was 30 trillion, now it's 31 trillion. So it's kind of funny how it works that way. So
Yeah.
so my theory is that yeah, so they want to raise interest rates because it's a broken system. You got to think bonds are just a loan, okay? So the United States government wants to borrow money. They issue treasuries, and they say, "Hey Robert, lend me $100,000 and I promise I'll pay you 3% every year for the next 10 years."
Yeah.
And then at the end of the 10 years, I'll give you your money back. And then, but the currency debased at 8%. So you actually lost money. How many hundred thousands do you want to go in, Robert? Nobody's
Yeah.
going to want to do that. So they really need interest rates to be above inflation. That's why they're doing all of this. But again, I think the limiting factor is going to be the amount of debt, because the amount of debt that they have, it's just they risk a debt spiral. That's what it's called. And so rather than have collapse of the currency, they will just start printing money again. That's essentially what you saw in England.
Yeah. And so we're heading towards the last third of the show. We've got 10 minutes left, sir. Was there any charts or
Wow.
anything?
Okay.
Yeah, I know. We tend to go off on a tirade, and people are going back to lunch. It's so close to the lunch hour being over. We want to make sure that people, if they have any comments or questions from the Satoshi himself, he's here, available to you at your discretion, up for another 10 minutes, sir. So, but we did want to talk about housing a little bit, right? Because I think that's what everybody's goal. Again, everybody's goal in life is to get a house. Whether they're renting, whether they can or not, whether they give themselves excuses why they haven't, but a lot of people are gravitated towards that goal. It's like early indoctrination, right? It's like you get married, you get the house after that, or whatever. But there are a lot of people that are mindful out there that want to use that as an investment and want to grow from that. So where are we at today?
That was that chart I sent you earlier on the text.
Oh shit!
It was the one graph.
You know how
I don't
many
know if
charts we have that he sent me?
right.
Anyway.
But essentially, you're right. 90% of people have most of their wealth in their home. Yeah.
And so in this environment, you're not in real estate, I am. So if I was coming to you, and because you have an outside opinion, would you buy real estate today?
No, I wouldn't.
At all, even for an investment? What if it was a good opportunity?
Um, well, I mean, those are the questions you want to ask. Okay.
You can ask me.
The
So.
only reason I say no, and I'm a
Lindsay says,
long
"Heck
term.
no."
I love real estate. Real estate actually is the best if you want to get cash flow, right? So the goal is when you retire or when you get to a point where you have 5 homes, you will do way better than if you only have one, right? That's I mean everybody knows that.
Yeah.
So long term real estate is great. And my thing is, I think I've shared it with you before. So as far as investments, I put 40% of my money in real estate. I put 40% of my money in stock market, and then the other 20% I do higher risk stocks, individual
Crypto,
crypto, that kind of stuff. Yes.
Mr. Satoshi, crypto, that one.
So real estate is great.
Yeah.
Yeah,
But you just
but
gotta.
just like with any
Yeah.
investment, like timing. I mean, if you don't care about timing, but that's why I was going to go through. Like, you can fundamentally. So there's two ways to value an asset. You can do it through fundamental analysis, or you can do it through technical analysis. Okay, that's how you gauge investments in the
Yeah.
stock market. Well, the housing doesn't have technical analysis, so really all you have is fundamental. And I mean, I can go through and show you how to fundamentally analyze something to see if it's overpriced or if it's not. You want? I can go. We can go on LoopNet now if you want to spend the last bit of time.
Well, we could talk to
Tell me
questions too.
about it.
Let me get you up on here. You're on LoopNet. Oh yeah. So when it comes like
Okay.
for me, when it comes to particular investments like a house, because I'm in the housing industry, it really has to make sense for you at the time. You know, in this environment. Never. Let me get out of here. In this environment where interest rates are extremely high, you do see prices going down. With interest rates, interest rates is one factor. Just like in technical analysis, and Henry will explain that to you in a second. There are different factors you take into consideration to make a decision. You're either going to get it right or you're going to get it wrong. There's very little time you're going to be like, oh, I was okay with that decision. It's either going to be you look in hindsight. A lot of like your investments are in hindsight. I'm so like when I bought my condo back in 2015, 2014. In hindsight, at the time, I was like, I'm buying at the top of the market. I looked at some of the information relating to the historics of the pricing of the house. The price of the house went up to like 100, or a condo went up to 150,000 at one point, and I bought it 85. And I'm like, I'm thinking this is the top. I'm overdoing it. I'm overextended. I think that interest rates at the time were roughly about 7%, but it was also a cheaper condo. And so I got in there thinking, oh my God, can I make the payment? I was able to make the payment, and I stayed there for a while. Looking back, I mean, that condo, there are other condos in that subdivision. I've moved on from there. That's now an investment. I moved on from there, but looking at those other condos in that particular development, they're selling at about 250,000 right now. So if I were to sell today, I potentially could yield about 100 and what 70 in cash off that investment. Hindsight, it was good. At the time, it was a difficult decision to make. So it really just depends on where you're at, and can you, for yourself, make a projection forward. Am I going to retain a good job? Am I going to have income? Is this okay for me? So there's so many other factors personally, but sorry, I
Right,
went
and
on a tirade there.
I should clarify that too, Robert.
Yes, sir. Go for it.
90% of people, a majority of their investments are their home.
Yeah.
Okay, so I was just talking about investment. So I have the luxury. I have a house. I have an investment property. And so when you're saying, would you buy real estate right now? For me, I don't need to buy one. I can sit around and wait, and not that I want a crash to come, but if it comes, that gives me an opportunity to buy something. Now, if you're talking about I live in an apartment and I want to purchase a home, that's something different, okay?
Yeah.
Because if you're, especially like if you're going to stay there for 20 years, it all boils down to my situation. How stable is my job? Am I at risk of losing it? And how much of my a percentage of my income is going to the mortgage? Is there what like if I bring home 4,000 a month and my mortgage is 3,500, that's higher risk for you than if it's 1,500.
You probably
You
wouldn't have
see
gotten
what
a
I'm
loan
saying?
anyway, just to say.
Whatever. But what I'm saying
It's a good
is,
barometer. It's
so
good.
I should clarify that. it makes less of an issue if it's your primary home, because you're right. As long as I can make the payment, then, and if I and it's more about like location is a big issue. For me, it's like, okay, what do the schools look like? What is the walkability? Is this going to have some value in the future that I'm putting my money into? And I don't, I want my kids to grow up in a house, not an apartment. Those are those kinds of things. If
Yeah.
you're talking about that, then yeah, then if you find something that you love, it's the neighborhood you like, it's great, there's minimal fixes, and okay, then yeah, go ahead, buy, because it doesn't matter later on. Like
Yeah.
you're saying, if my goal is to accumulate more homes later on, then most likely this property, as long as I kind of choose wisely, will be more valuable than it is today. Even if short term, the housing market goes down, it will eventually come back up. So,
Well, and you said we have about 3 minutes there. So you said you wanted to have some advice, or maybe advice, not that we're financial advisors, but you did have some things you look at as far as LoopNet and what you do to procure property, or at least looking at investment, right?
yeah. So
Go
this
to the
is going to be
screen.
more.
We're going to the screen. We're going to LoopNet.
Okay. I think this will take more than 3 minutes, but I'm going to try to
Oh, God.
go through it quickly.
Lindsay's got to go back to lunch.
Uh,
She's got to go back to work. She's like,
okay. So essentially, well, then come back later and watch this. But anyway, essentially,
there's
so
always a
fundamental
solution.
analysis is just looking at what is the value of real estate. And so the value of real estate is essentially what it can produce as far as cash flow. Okay. And
Yeah.
so what I do when I'm looking so for me, I'm looking at like a multifamily apartment building. Okay. So this is a Sacramento area. And one of the ways that I look is I go through LoopNet. LoopNet has like commercial type things, multifamily. The other thing is like if a condo is another example. But this will basically, like, you can go through this and see what are the listings in your area. Here's one, for example. This is a 4-unit apartment. They want $1 million for this house. I kind of picked this one because the math is a little bit easier since it's like at an average $1 million. But if you go through this, most of these properties will have a memorandum, or they should have some information for you. Now, how come it's not going through and showing it on your screen, Robert?
I don't know. You're in control, buddy.
Oh, you know why? Because it's a different tab. Hold on.
Well, I'm just going to come back here real quick while you switch your tabs there. No, we're not switched yet. Did I tell you we only had 3 minutes?
Yeah, I told you it's going to take longer. Okay, let's see.
I'm retiring. I'm retiring after the show. No.
Okay, here we go.
Right,
Offering memorandum.
Here we
So
go.
when you're looking at a property, it should give you
There it
some
is.
information about the property. Okay, and here it goes. This is saying that they're selling this for $1 million. There's a cap rate of 3.6. So what is a cap rate? Cap rate is if I had $1 million in cash and I paid for this property, it's going to pay me 3.6% a year. Okay, and
Is
how
that
did
good?
they get that number? You take the number of units. So there's 4 units, and let's see if it's down here. You need to look at here's financial analysis. You take the number of units, you take the rent times 12, and they come up with a number of $63,000 a year. So that $63,000 is the income that you generate from this property. Now you have to subtract the expenses. I'm going short form here because we're on time.
We're over on time.
Subtract the expenses, which equals like insurance, taxes. They do all of this for you, which is kind of nice. And once you do all that, that leaves you with an NOI, net operating income, which is right down here, of $37,860. And so that's what you're looking at. And so 37, and that's where you get that cap rate, right? They said the cap rate was 3 point something.
3.61. I'm paying attention.
$37,860 divided by 12. That gives you $3,155 a month, right, of take-home pay from this investment property. Here, I'm going to switch screens.
Well, that's
with
if you do
again.
nothing, right?
What do
outside
you
of?
mean if you do nothing? I'm gonna switch screens, so just a warning.
Most people want to live like the do nothing lifestyle, right? They just want to live on their yacht and click a couple buttons, and they're back to fishing in the Gulf or something.
Well, everybody wants that, but it's not. That's not
That's not
reality.
realistic. That's your
The
lifestyle,
reality
isn't it?
is
Don't you?
the reason we have this show, or the reason we started this show, was so that you could get to that point. But this is how you do it. You accumulate assets.
I want
You
to fish in
accumulate,
Lake Tahoe every day.
now, if I was 20 years old, I would buy this thing and live in one of them.
But if you're
and then
20,
rent
can
the
you
others.
afford it? I mean, that's really the bigger question. So, like the one takeaway that I tell people all the time is work on your credit score. Your credit score is kind of like the golden key to everything. You know, that
Improve
gives you
your
the
job.
best rates. That
Make
gives
more
you,
money. That's step number one. You got to make more money. You got to spend less money than you make.
So
And you
don't
gotta
buy that
save money.
Tesla. Wait until you can financially support yourself.
Right. You
before
don't get
buy-
the Tesla till you have like 3 investment properties. Then you buy the Tesla.
or unless you change your name to Sacramento
Anyway.
Satoshi.
So now I'm going to Zillow, and the reason I use Zillow is just because they have this mortgage calculator, and there's many.
I
of these,
use the
so-
mortgage calculator too. That I like that one.
But let's just say that the price, if the guy is willing to accept $1 million, we said, right? Well, this is going to give you all the information that you need. $1 million.
Does multifamily work the same way?
20%.
Do you know?
Probably
Do you know
most-
if multifamily
what's
works
that?
the same way with mortgage insurance? If you're not putting 20% down? I do residential. I don't do commercial. So
Sometimes, well, now see now you may have to put more down payment because banks. So that's why I'm putting 30%. For an investment property, a lot of banks will want at least 20% and sometimes 30%. So I'm even going to go high. They suggested when you look at that memorandum to go to 30%. So that's why I'm putting 30%. So this is what you need. You need $300,000. How am I going to get that? Okay,
How's
this
the
is
one?
the reason why real estate. I mean, I would love real estate. I want to get more real estate, but you got to get this. You got to get this down payment. So that's in the short term. You save money and then you do something else like stock market. Try to grow your money through the stock market so that you can build up this $300,000, and then you go to real estate. So the long-term goal is always to accumulate as much real estate as you can. It's just more difficult to do because you need more money. So that was your point earlier. But anyway, 30% down,
I'm
what
glad
that
I have a
tells
point
you,
once in a while.
that gives you principal and interest of $4,400 a month. And we said that if you buy this property, you're going to end up getting $3,150. So right off the bat, you're underwater. You're out of pocket $1,300 a month, which to me just suggests that this home is overpriced. So that's just basically how. But that's how I. You can do the same thing with real estate. How much could you get in rent? Are the rents going up or are the rents going down? If you look at rents and rents are going down, most likely real estate will be going down. And as far as, and like I said again, if the market is still haven't found a bottom, if it's continuing to go down, real estate will continue to go down. So in that case, these are the things just to keep in mind. But once again, if it's just your primary home and that's where you're going to live, then who cares? It's all about what you can afford.
Well, and in a situation like that, if it's a fourplex or quadplex, you could reside in one of the homes. And that's the other thing, too, to talk to not only a commercial broker, but also a residential, too. If you have a quadplex, I think that was a quadplex, right?
Yeah.
So if you're lacking the funds, you can essentially apply for a primary residence in that location and only put 5% down. I mean, of course, you're going to have
That would
mortgage
allow you
insurance.
to
There's
put
some
less
other
money, yeah.
Yeah, there's going to be additional things you take in account, but you're also living in a place that you own and that you're renting out the other units. So, I mean, I wouldn't say that particular property is something that you completely just kind of disregard based off just the analysis that Satoshi gave, but it's something that could consider if you're going to live in that home. You know, that could be an option for you too, because those rents will go against your DTI. But that's for another show, sir. We're 5 minutes over. Can you believe it? The time just flies by. We had about 80 screens to go through. I think we got through 2. We like to rant and rave a little bit, but that's right here on the show. since we're coming to the end, sir, I will give you the last word. Anything that you want to tell our audience that they should walk away with today? You have the floor.
That's it. We went. It's just the long-term plan is the same. Just stick with it. Markets go up and down in the short term, but the long-term plan should still be the same.
Awesome. So join us October 20th. Meet Sacramento Satoshi here live at the next event, 5:30, October 20th. Tickets are below. I think there is a coupon code, but text me, reach out to me, and you can get the $10 off your ticket up until October 16th. But you got to text me. We'll get to it later. But great having you on the show, sir. It's been a while, and I'm glad we got to do this day. You work next week, right? So you occupied. So we had to warm up.
I'll be there in 2 weeks, Robert.
He will be here. I will be here. RCO Network, Robert Morales. We'll catch you guys next time.